Equity crowdfunding. It lets you raise money by selling equity to the general public without going through the burden of actually becoming a public company. This is a huge innovation that I think every founder and entrepreneur needs to know about. So check it out. There's two different exemptions here in play. You might have heard of Regulation CF, which lets you raise up to $5 million a year. And Regulation A lets you raise up to $75 million. This is a lot of money. And this is something that everybody should be looking at if you're interested in growing your business through raising capital. You've heard of VC and PE, and you can do that. That's actually based on Regulation D. If you want to know the differences between these things, check out my video on exemptions. But the important part here is that this is an innovation that came in 2016 that lets me and you as founders go out there, get checked by a third party, finance, auditor, different levels of scrutiny, go file or register with the SEC, again, different tiers. We have to be out there reporting different levels of scrutiny and reporting requirements depending on how much money you're raising. But most importantly, that we can be out there marketing to potential investors, anyone and everyone, and letting them buy a little bit of equity. 1,000 people investing $1,000 each is $1 million. And I don't know about you, I've been out there raising capital for a long time, and I've talked to big investors, funds trying to raise $1 million, and it's very difficult. And I think raising from 1,000 people is a lot better, actually. This is a huge sign of validation. If you've got customers, a community, people that believe in you, they're buying your product anyway. These people want to be a part of your growth, of your story. This is the retail investor that wants a piece of the action. They didn't have access to it before. Equity crowdfunding gives them this option. Check out my videos on Regulation CF and A. They'll give you more detail on how to do this, but just know that the game has changed. This is getting better and better. Companies that use this method are statistically much stronger than the ones that have used venture-backed money. And I think everyone should know about this. Spread the word. We can raise capital from the public with a little bit of extra work, and we as founders should be doing so. This is the democratization of capital, of asset allocation, no intermediaries, no brokers, no bankers involved. Big time, big deal. Check it out.